Question 1. Which of the following best describes the principle of indemnity in insurance? A. It ensures that the insured can profit from a loss. B. It prevents the insured from receiving more than the actual loss suffered. C. It allows the insurer to set premium rates based on the insured's previous claims. D. It mandates that the insured must pay a deductible for each claim. Answer. B. Explanation. The principle of indemnity is a fundamental concept in insurance that ensures the insured is compensated only for their actual loss, preventing them from profiting from an insurance claim. This principle maintains fairness in the insurance process by aligning the payment with the loss incurred. According to the Montana Insurance Code, specifically under SS 331305, indemnity prohibits the insured from recovering more than the amount of their loss, reinforcing the idea that insurance is meant to restore rather than enrich. Therefore, option B accurately reflects this principle, while the other options misinterpret its intent or apply to different aspects of insurance practices. Question 2. Mr. Thompson owns a retail store and is reviewing his general liability insurance policy. He discovers that his policy has an exclusion for property damage caused by faulty workmanship. He is concerned because he had a recent incident where a customer's property was damaged due to a defect in the goods sold. What should Mr. Thompson do to address this issue? A. File a claim with his general liability insurer, citing the damages as a covered loss. B. Consult with an attorney to assess the possibility of pursuing damages against the manufacturer of the goods. C. Purchase an additional policy that specifically covers product liability claims. D. Accept that the damage is not covered under his current policy and take no further action. Answer. C. Explanation. In this scenario, Mr. Thompson faces a situation where his general liability insurance policy excludes coverage for property damage arising from faulty workmanship. This means he cannot file a claim for the recent incident under his existing policy as per the exclusion clause. To ensure proper coverage for claims arising from product defects, Mr. Thompson should consider purchasing additional product liability insurance, which provides coverage for damages caused by goods sold or distributed that result in property damage or bodily injury. Montana's regulations on insurance emphasize the importance of adequate coverage to protect against specific risks. See Montana Code Annotated SS 3315101. Option C is the best course of action, while the other options either misinterpret the policy exclusions or do not provide a solution. Question 3. Which of the following factors would most likely influence the premium rate set by an insurer for an automobile insurance policy in Montana? A. The insured's marital status and credit score. B. The age of the vehicle and the number of previous owners. C. The type of coverage selected and the insured's driving history. D. The geographic location of the insured and the size of the insurance company. Answer. C. Explanation. Premium rates for automobile insurance are influenced by various factors, but the most significant are the type of coverage selected, e.g. liability, collision, comprehensive, and the insured's driving history, including past accidents and violations. Insurers evaluate these aspects to assess the risk associated with insuring a driver and to determine appropriate premium amounts. According to the Montana Department of Insurance, underwriting guidelines emphasize that a driver's history is critical in establishing premiums, as higher risk typically results in higher premiums. Therefore, option C accurately captures the main influencing factors, while options A, B, and D may have some impact on premiums. They are not as directly related to the specific risks associated with the insured's driving behavior and the coverage type chosen. Question 4. Under the Montana Workers' Compensation Act, which of the following is true regarding an employer's obligations? A. Employers are only required to provide workers' compensation insurance if they have more than 3 employees. B. Employers can opt out of providing coverage if they can prove that their workplace is safe. C. Employers must maintain insurance coverage for all employees, regardless of the number of employees. D. Employers are allowed to self-insure without any state regulations. Answer. C. Explanation. Under the Montana Workers' Compensation Act SS 3971201, Mackay employers are required to provide workers' compensation insurance for all employees, regardless of the number of employees they have. This law ensures that all workers are protected in case of work-related injuries or illnesses. While certain small employers may be exempt in other states, Montana mandates coverage for all employees to promote workplace safety and employee rights. Therefore, option C is correct, while options A, B, and D misinterpret or misrepresent the requirements of the law. Question 5. What is the primary purpose of a subrogation clause in an insurance policy? A. To allow the insured to claim for losses that are not covered by the policy. B. To enable the insurer to recover costs from a third party after paying a claim. C. To ensure that the insured does not receive payment for the same loss from multiple sources. D. To provide the insured with the option to choose a different insurer for the claim. Answer: B. Explanation. A subrogation clause allows the insurer to step into the shoes of the insured after paying a claim, enabling the insurer to pursue recovery from a third party that caused the loss. This principle is essential for insurers to manage their expenses and keep premium rates reasonable. It also prevents the insured from profiting from a loss by receiving compensation from both the insurer and the third party. According to the Montana Code annotated SS 3315312, insurers have the right to seek recovery through subrogation, making option B the correct choice. The other options misinterpret the purpose and functionality of subrogation in insurance. Question 6. Which of the following is not typically considered an example of loss control measures in insurance? A. Installing a fire suppression system in a commercial building. B. Providing safety training programs for employees. C. Increasing the policy limits on a property insurance policy. D. Conducting regular risk assessments to identify potential hazards. Answer: C. Explanation. Loss control measures are strategies implemented to reduce the likelihood of losses and injuries, thereby minimizing insurance claims. Examples include installing safety equipment, providing employee training, and conducting risk assessments. Options A, B, and D. However, increasing policy limits on a property insurance policy, option C, does not reduce risk, rather it simply increases the potential payout by the insurer. This option does not contribute to loss control, making it the correct answer. Question 7. In Montana, what are the minimum liability coverage limits required for automobile insurance? A. $25,000 per person, $50,000 per accident, and $20,000 for property damage. B. $30,000 per person, $60,000 per accident, and $25,000 for property damage. C. $50,000 per person, $100,000 per accident, and $50,000 for property damage. D. $15,000 per person, $30,000 per accident, and $10,000 for property damage. Answer A. Explanation. Montana law requires minimum liability coverage of $25,000 per person, $50,000 per accident, and $20,000 for property damage. This standard is designed to protect other parties involved in an accident from financial loss due to the insured's liability. According to Montana Code annotated SS 616103, these limits are in place to ensure that drivers carry sufficient insurance to cover potential damages resulting from their actions on the road. Therefore, option A accurately reflects Montana's minimum requirements, while the other options do not align with state law. Question 8. If an insurer discovers that a policyholder has committed fraud when filing a claim, what is the most likely outcome according to Montana law? A. The insurer must pay the claim in full regardless of the fraud. B. The insurer may deny the claim and cancel the policy. C. The policyholder will be required to pay a fine but will retain coverage. D. The policyholder can appeal the decision to the Montana Commissioner of Securities and Insurance. Answer B. Explanation. Under Montana law, if an insurer discovers that a policyholder has committed fraud during the claims process, the insurer is entitled to deny the claim and may also cancel the policy. This is reinforced by the Montana Insurance Code SS 3318242, which provides that fraud or intentional misrepresentation of material facts can lead to the termination of the insurance contract. Therefore, option B is correct, while the other options misrepresent the legal consequences of insurance fraud. Question 9. Which of the following statements accurately reflects the principle of the law of large numbers in insurance? A. The more policies an insurer has, the higher the premiums they can charge. B. The larger the number of similar risk exposures, the more predictable the overall loss experience becomes. C. An insurer can only effectively predict losses if it has more than 100 policyholders. D. The law of large numbers applies exclusively to life insurance products. Answer B. Explanation. The law of large numbers is a statistical principle stating that as the number of similar risk exposures increases, the actual loss experience will more closely approximate the expected loss. This principle allows insurers to predict losses more accurately and set appropriate premium rates based on collective risk. It is foundational for the underwriting process in all types of insurance, not just life insurance, making option B the correct answer. Options A, C, and D misinterpret the application and implications of this principle. Question 10. During the underwriting process, an insurer is assessing a new applicant for a homeowner's insurance policy. Which of the following factors would least likely influence the underwriting decision? A, the applicant's credit score. B, the applicant's prior claims history. C, the geographic location of the property. D, the applicant's age and marital status. Answer: D. Explanation. While an applicant's age and marital status can provide some information about risk, they are generally not primary factors in underwriting decisions for homeowners insurance. In contrast, a credit score, option A, prior claims history, option B, and geographic location, option C, are critical indicators of risk and can significantly influence the underwriting outcome. Insurers often use these factors to assess the likelihood of future claims and to determine the appropriate premium. Therefore, option D is the least likely to influence the underwriting decision, making it the correct choice. Question 11. Which of the following scenarios would most likely trigger a liability insurance claim for a business? A. A customer slips and falls on a wet floor in the business premises. B. An employee sustains an injury while operating machinery. C. A business experiences a data breach affecting customer information. D. A vendor fails to deliver goods on time, resulting in lost sales. Answer A. Explanation. Liability insurance covers claims arising from injuries to third parties or damage to their property due to the business's operations. In this scenario, when a customer slips and falls on a wet floor, option A, it directly relates to the business's responsibility to maintain a safe environment for customers. Options B and C pertain to workers' compensation and cyber liability, respectively, while option D relates to business interruptions or losses, which are not covered by standard liability policies. Therefore, option A is the correct answer. Question 12. In the context of automobile insurance, what is the primary purpose of collision coverage? A. To cover the cost of injuries sustained by the insured driver. B. To protect against damage to the insured's vehicle resulting from a collision with another vehicle or object. C. To provide financial protection in case of theft of the insured vehicle. D. To cover damage to the insured's vehicle caused by natural disasters. Answer B. Explanation. Collision coverage specifically protects the insured's vehicle from damage resulting from collisions with other vehicles or objects, regardless of fault. Option B. It does not cover injuries, option A, theft, option C, or damage from natural disasters, option D, which would require different types of coverage like liability, comprehensive or specific endorsements. Therefore, option B is the correct choice. Question 13. What is the significance of an insurance policy's declarations page? A. It lists all the exclusions and limitations of the coverage. B. It outlines the claims handling process for the insurer. C. It provides essential information about the policy, including the insured parties and coverage limits. D. It details the legal obligations of the insured and the insurer. Answer C. Explanation. The declarations page of an insurance policy provides crucial information, including the name of the insured, the policy number, the coverage limits, and the effective dates of coverage. Option C. It serves as a summary of the policy and outlines who is covered and for what amounts. Options A, B, and D do not accurately describe the primary purpose of the declarations page, which is fundamentally about providing key details regarding the coverage itself. Question 14. A client informs you that they want to purchase a homeowner's insurance policy but are concerned about damage from flooding. Which of the following is the best course of action to advise them? A. Recommend they increase their deductible for flood damage. B. Suggest purchasing a standard homeowner's policy as it covers all types of water damage. C. Advise them to obtain a separate flood insurance policy since standard homeowners policies do not cover flood damage. D. Inform them that flood coverage is included in their homeowner's policy automatically. Answer C. Explanation. Standard homeowners insurance policies typically do not cover flood damage, therefore it is crucial to advise clients to obtain a separate flood insurance policy. Option C. This policy is usually provided through the National Flood Insurance Program, NFIP, which specifically addresses flood-related losses. Options A and B provide incorrect information, while option D is misleading, as flood coverage is not automatically included in standard homeowners policies. Thus, option C is the most accurate and responsible recommendation. Question 15. Which of the following is a primary factor that affects premium rates for general liability insurance? A. The personal financial history of the business owner. B. The nature of the business and the level of risk involved. C. The age of the business and its physical location. D. The business owner's education level and experience. Answer: B. Explanation. The nature of the business and the associated risk levels play a significant role in determining premium rates for general liability insurance. Option B. Insurers assess how likely it is that a business will face claims based on its operations and industry, while other factors such as the age of the business and location may influence rates to some extent. They do not have as direct an impact as the inherent risks associated with the business itself. Options A and D are less relevant in premium calculations, making option B the best answer. Question 16. In Montana, what is the maximum fine that the Montana Commissioner of Securities and Insurance can impose for a violation of the insurance code? A. $1,000 per violation. B. $5,000 per violation. C. $10,000 per violation. D. $25,000 per violation. Answer: C. Explanation. According to Montana Code Annotated SS 331317, the Montana Commissioner of Securities and Insurance has the authority to impose fines up to $10,000 for each violation of the insurance code. Option C. This regulatory power ensures compliance with insurance laws and protects consumer interests. Options A, B, and D do not accurately represent the fines outlined in the law, making option C the correct answer. Question 17. Which of the following types of coverage is typically included in a standard commercial general liability CGL policy? A. Professional liability coverage for services provided. B. Premises liability coverage for bodily injury on business property. C. Cyber liability coverage for data breaches. D. Employment practices liability for wrongful termination claims. Answer: B. Explanation. A standard commercial general liability (CGL) policy typically includes premises liability coverage, which protects against bodily injury claims that occur on the business's property. Option B. This is a fundamental aspect of CGL policies. In contrast, professional liability (Option A) and cyber liability (Option C) require separate policies, and employment practices liability (Option D) is also not included in standard CGL coverage. Therefore, option B is the correct choice. Question 18. Mr. Anderson runs a small bakery and is worried about potential slip-and-fall accidents. What risk management strategy should he consider implementing to mitigate this exposure? A. Increase his liability insurance limits. B. Offer discounts to customers to attract more business. C. Implement regular safety inspections and employee training programs. D. Use social media marketing to increase customer awareness of the bakery. Answer: C. Explanation. To effectively mitigate the risk of slip-and-fall accidents, Mr. Anderson should implement regular safety inspections and employee training programs. Option C. This proactive approach will help identify and address hazards, reducing the likelihood of accidents, while increasing liability insurance limits. Option A can provide financial protection. It does not prevent accidents from occurring. Options B and D do not address risk management and are not relevant to the specific concern raised. Therefore, option C is the best strategy. Question 19. What is the primary function of reinsurance in the insurance industry? A. To allow insurers to write more policies without increasing their financial risk. B. To provide a mechanism for policyholders to transfer their risk to another insurer. C. To ensure that all claims are paid in full regardless of the insurer's financial situation. D. To protect the insured from losses that exceed their policy limits. Answer A. Explanation. Reinsurance allows insurers to transfer portions of their risk to other insurance companies, thereby enabling them to write more policies without significantly increasing their financial exposure. Option A. This mechanism helps stabilize their financial performance by sharing the risk associated with large claims. Options B and D misinterpret the role of reinsurance, while option C is incorrect since reinsurance does not guarantee full payment of claims. It only manages risk. Thus, option A is the correct answer. Question 20. Which of the following best describes the principle of indemnity in insurance? A. Insurers are obligated to provide a fixed payout regardless of the loss incurred. B. Insureds should not profit from their insurance policies, but instead be restored to their pre-loss financial condition. C. Policyholders can claim for any amount they desire as long as it is covered under their policy. D. Indemnity allows insurers to deny claims based on the insured's financial situation. Answer: B. Explanation. The principle of indemnity states that an insured should not profit from an insurance policy but rather be restored to their financial position prior to the loss. Option B. This principle ensures that compensation reflects actual losses and prevents insureds from receiving windfalls from claims. Options A, C, and D misrepresent the concept of indemnity, making option B the only correct choice. Question 21. Which of the following statements about umbrella insurance policies is true? A. They provide coverage only for property damage. B. They serve as a primary policy for all types of risks. C. They extend the liability limits of underlying policies. D. They are mandatory for all business owners. Answer: C. Explanation. Umbrella insurance policies provide additional liability coverage above the limits of underlying policies, such as homeowners, auto, or commercial general liability insurance. Option C. This type of insurance is designed to protect against large claims that could exceed the limits of standard policies. Options A, B, and D are incorrect. Umbrella policies cover more than just property damage, do not act as primary policies for all risks, and are not mandatory for business owners. Question 22. Under what circumstances can a homeowner's insurance policy deny a claim for water damage? A. If the water damage is caused by a sudden and accidental discharge of water. B. If the water damage is due to a slow leak that has gone unnoticed for an extended period. C. If the water damage results from a storm. D. If the policyholder has maintained a home inventory. Answer: B. Explanation. Homeowners insurance typically excludes coverage for water damage resulting from long-term leaks or wear and tear, which are considered maintenance issues. Option B. In contrast, sudden and accidental discharges of water, option A, are generally covered, while storm-related damages, option C, may be covered depending on the policy. A maintained home inventory, option D, does not affect coverage but can aid in the claims process. Question 23. What type of insurance coverage is typically required by lenders to protect their financial interest in real estate? A. Homeowners insurance. B. Title insurance. C. Flood insurance. D. Mortgage insurance. Answer: D. Explanation. Mortgage insurance is usually required by lenders when borrowers make a down payment of less than 20% of the property's purchase price, protecting the lender in case the borrower defaults. Option D. Homeowners insurance. Option A, protects the homeowner's property. Title insurance. Option B, protects against title defects. And flood insurance. Option C is often optional unless the property is in a designated flood zone. Question 24. Which of the following is not a typical exclusion in a standard homeowner's insurance policy? A. Damage from earthquakes. B. Loss of business property. C. Intentional acts of the insured. D. Damage from a fire. Answer: D. Explanation. Damage from fire is typically covered under standard homeowners insurance policies. Option D. In contrast, damages resulting from earthquakes, option A, loss of business property, option B, and intentional acts of the insured, option C, are common exclusions that would not be covered by a standard homeowners policy. Question 25. In Montana, what is the primary purpose of the Montana Insurance Guarantee Association (MIGA)? A. To provide direct financial assistance to policyholders. B. To ensure that insurance companies maintain adequate reserves. C. To protect policyholders by covering claims of insolvent insurers. D. To promote insurance literacy among consumers. Answer: C. Explanation. The Montana Insurance Guarantee Association (MIGA) primarily protects policyholders by covering claims from insurance companies that become insolvent. Option C. This helps maintain consumer confidence in the insurance market. Options A and B do not accurately reflect MIGA's function, while option D is outside of its primary purpose. Question 26. Which of the following types of coverage would typically protect a business from lawsuits arising from injuries caused by their products? A. Professional liability insurance. B. Product liability insurance. C. Cyber liability insurance. D. Workers' compensation insurance. Answer: B. Explanation. Product liability insurance specifically covers lawsuits related to injuries or damages caused by a business's products. Option B. This type of coverage protects against claims of negligence, defective products, or inadequate warnings. Professional liability insurance. Option A, cover services provided. Cyber liability insurance. Option C, addresses data breaches and workers' compensation insurance. Option D, covers employee injuries, making option B the correct answer. Question 27. Which of the following is a common feature of a comprehensive automobile insurance policy? A, coverage for damages caused by uninsured motorists only. B, protection against theft or vandalism of the insured vehicle. C, coverage limited to property damage claims only. D, no coverage for injuries sustained by the insured driver. Answer: B, explanation. A comprehensive automobile insurance policy typically includes protection against theft, vandalism, and other non-collision related damages. Option B. It does not limit coverage to uninsured motorists. Option A does not cover only property damage claims. Option C, and does include coverage for injuries sustained by the insured driver. Option D, making option B the correct choice. Question 28. What does the term subrogation refer to in the insurance industry? A, the process of determining the value of a claim. B, the insurer's right to pursue recovery from a third party responsible for a loss after paying a claim. C, the adjustment of premiums based on the insured's claims history. D, the requirement for policyholders to report all claims to their insurer promptly. Answer: B, explanation. Subrogation refers to the insurer's right to recover costs from a third party responsible for a loss after the insurer has paid the claim. Option B. This process helps insurers minimize losses and keep premiums lower. Options A, C, and D do not accurately define subrogation in the insurance context. Question 29. What type of coverage is typically included in a business owner's policy? A, business interruption coverage. B, employee theft coverage. C, professional liability coverage. D, flood insurance. Answer A, explanation. A business owner's policy typically includes business interruption coverage, which helps cover lost income due to temporary closure following a covered loss. Option A, while employee theft coverage, option B, may be added through endorsements. It is not standard in a BOP. Professional liability coverage, option C, and flood insurance, option D, usually require separate policies or endorsements, making option A the best answer. Question 30. Which of the following best describes the term exclusion in an insurance policy? A condition that must be met to receive coverage. B, an event that will always be covered by the policy. C, a specific risk or type of loss that is not covered by the policy. D, a provision that guarantees payment for claims without investigation. Answer: C, explanation. An exclusion in an insurance policy refers to specific risks or types of losses that are not covered by the policy. Option C. This is important for policyholders to understand as it defines the limits of coverage. Options A, B, and D do not accurately describe exclusions in an insurance context.